Joining us now to discuss the crypto markets is Imran Lakha. He's founder of Options Insight. Hello, Imran.
Hi, how's it going? Thanks for having me.
Glad to see you again. So Bitcoin, of course, falling below $29,000. It was above $30,000 it seemed almost a second ago. What's going on here?
Well, we've seen a decent amount of liquidations, futures-led liquidations recently. Obviously, there was a very big clip that went up on Binance. But, a bit of exhaustion from the market. You had Bitcoin obviously been quite strong recently on the back of a bit of a flight to safety bid, a bit like digital gold. Obviously, gold's done very well as well. And it was starting to exhaust itself, passing the baton on to Ethereum. Ethereum just had its recent Shanghai upgrade, which went well, and Ethereum had a pop up to about 2,100, and it looked like, okay, it's game on for crypto. Now Bitcoin has passed the baton on to ETH, let's go. But we've seen a pretty swift failure there, ETH getting back below 2,000.
Yeah, I think you have some charts for us, but before we get to it, I think, Amitaj, you had some questions here regarding some of the macro issues, correct?
Yeah, thanks so much for that, Lawrence. So the monetary policy, as we saw with UK recently, this week, in fact, is likely to tighten and the fears of recession remain. Has the crypto market priced that in already?
Yeah, so some of the crypto rally, was on the back of the idea that the rates market has priced in that the Fed is pretty much done, right? So they've got one more hike to come in early May. And it's pretty consensus now that that's the last hike. Now, the market was pricing in that they were going to start cutting pretty soon. That those cuts have been pushed back a bit. So now the consensus that's forming is that we've got one more hike, we're done, but we may well hold rates there for the rest of the year. And those yields have started to creep back a little bit higher, and that's not so great as well for crypto. Plus, you've got this net liquidity that is being has been drawing down the TGA account, right, the Treasury General account. And that has been good for crypto because crypto is kind of the market that's the most responsive to liquidity. And if that liquidity does start to roll over now, like some people are anticipating, then that's not so good for crypto either. So we're at this kind of big pivotal moment now, where we've had a big rally in crypto. We've priced in a lot of things, but if liquidity does roll over in the short term, then we may be in for a bit more weakness in the near term in crypto markets.
So I kind of want to go to the specifics here with ETH. You sent us 3 charts, and I want to kind of hear what that's telling you and what it should tell us. I think the first chart we have here is implied volatility versus so it's at the money 7 days, at the money 30 days. I believe that's what that is, and 10-day realized volatility. And below on the bottom you have the carry volume. So can you kind of explain what's going on here?
Sure. So this chart, this is from our crypto options dashboard that we give to our subscribers every week. And basically what we track here is the implied vol for 1 week and 1 month options. We also look at the 10-day realized, see how those are comparing to each other. And that carry is pretty much telling us the difference between the average of those implied vols and the 10-day realized. So when that carry numbers are high, when it's a high positive number, it's basically saying the implied vol is relatively expensive to realized. And when that carry drops down to 0 or negative, it's saying the realized is picking up and options look relatively cheap. So we've generally had quite,
so that's what we're seeing right now.
Completely. So we've had implied vols trading at a bit of a premium, but recently with the rollover we've just seen in ETH where we had that pop and flop back down, the realized has popped and the implieds have continued to drift. And so that's saying that you don't really want to be selling Ethereum options here because they're actually realizing quite well and the implieds haven't really popped to reflect that. So Ethereum options in general look pretty good value.
And now, relative to, let's look at it relative to Bitcoin, ETH to Bitcoin volatility spread. And that's the next chart we have here. You're seeing some sort of, it looks like that spread is shrinking, correct?
Yeah, so that spread has come down a long way from historical levels, right? So let's say last year, most of the time that spread would live in the sort of 10 to 15 vol point range. And because Bitcoin has been the main driver this year in crypto's rally, you've actually seen that spread compress quite a lot. So that spread compressed, and a month ago, you can see in the gray line, it was actually trading below zero, where Ethereum was trading a bit cheaper than Bitcoin, because that's Bitcoin was driving all the volatility. Now, obviously, with the Shanghai upgrade, with a bit of excitement coming back to Ethereum, we have seen a pop in realizing Ethereum. We've got the 30-day spread trading above 5, we've got the 10-day spread trading above 10, and we've got the implied spread, which is the bright green line for the whole curve across all the different maturities, is trading at around 4 vols, which is still historically very cheap, right? So we think, it's still good value to own ETH vol versus Bitcoin vol. And a nice way of playing the Shanghai upgrade that we had got our subscribers into was to buy calls on Ethereum and sell calls on Bitcoin. That trade looked pretty good a few days ago, but obviously now everything's come back down. But these are the sort of smart ways that you can get into Ethereum upside without having to take too much of a macro view by funding it with some Bitcoin upside, if you now think that's going to be the driver of upside if we go back.
Yeah, so that brings us to our next the 1 month skew here, ETH to Bitcoin, ETH and Bitcoin, and the spread again seems to have shrunk considerably. Correct?
So these are just looking at the individuals and the spread. Yeah, the spread is pretty benign. I mean, you did have Ethereum puts trading quite a bit higher than Bitcoin puts sort of through most of last year, as because people perceived Ethereum was the higher beta asset and the risk was really materially to the downside. Earlier this year, as Bitcoin started to explode higher, Bitcoin calls really caught a bid first. So Bitcoin skew flipped towards calls. Ethereum kind of lagged because it wasn't rallying quite as sharply. And then last week on the Shanghai move, we did see Ethereum flip back towards calls briefly. But as we've given up the recent rally, we have seen both Bitcoin and Ethereum puts in the front end for the 1 week and the 1 month. We've seen them flip back down towards put premium from call premium. The back end of the curve is still holding for calls, 2 to 3 vol points for both Ethereum and Bitcoin calls. So they're priced pretty similarly, but the front end is now starting to get a sniff that the short-term risk is actually to the downside as some put demand comes back in through the recent rollover.
So I kind of, to kind of wrap it up in a bow, if you will, as we looked at the previous charts of how things were going with Ethereum, you saw that compression happen between the implied volatility and the realized volatility. Nonetheless, you see the market seems to be betting that at least that if there is going to be any issues going on, it's going to be to the downside. It's going to be that puts are going to be more valuable than calls. Correct? I mean, they kind of are. They've kind of given up on ETH. Is that my take here? Is that what I should walk away with?
In the very near term, yes, we're starting to get a sniff that they're more worried about the downside than the upside. But when we look 3 to 6 months out, it's all still very much quite constructive. There's a call premium. People are just trying to park their bullish bets a bit further down the line. As you know, obviously we've got the Bitcoin halving coming up next year, and the cycle suggests that we may be in for a decent bull run. But just in the near term, risk assets have done quite well. There may be a period of weakness. We have potentially got a recession coming. And so you might just generally get dragged back down along with other risk assets in the near term. But longer term, people are still pretty optimistic from what the curve is telling us.
Got it.
All right. Well, thanks so much for that, Options Insights founder Imran Lakha. Very insightful, truly. Well, thanks for coming on.